All right, good morning, everybody. Happy Friday. It's the last trading day for July here, July 29th, 2022. Let's go ahead and jump right in. I want to do a quick review of yesterday. I'm just going to really quickly push through this. Um, we came out of the open, remember yesterday, and said if we can't get up through 40.42 and the high of the day before, which is that red line up there at 42 and 3/4, that we were expecting there to be some type of pullback. So what happened here, we got a nice bullish follow through out of the open and then came just about a point in front of 40.42 and it failed. So as it started selling off, I told you right around when we came down into the 200 moving average here, the tick started showing some really clear patterns for a potential breakdown, and sure enough, it came down right through VWAP. And when the market bounced off of our minor eye level at 39.97, came up, started pushing right back up into the OPL. That's where I took that short, took it right back to the 39.97 minor level. And then, of course, what they have to do, they had to duck through the minor level by about 2 or 3 points there. Even though it was holding for quite a while, they came down and had to duck through by 3 or 4 points, 3 points there. And then finally it started ripping higher. Came back into the OPL again, tagged it to the tick, pulled back and bounced just in front of the 200 there. And then we just got a nice cut right through 40.42. So we got the test right out of the open, pulled back, held the minor level at 97, and then the sucker just started ripping all the way. And you could even see the market came right into the minor level at 23 here. Had trouble for a little bit, bounced through it, but eventually just kind of continued to chug right on through that major resistance level at 42. We came up right into our 40.58 level, had a bunch of trouble there for quite a while, and then came up right into the 40.74. Remember 40.74 from what I talked about all week. That was that major area of support. So we came into it. There really wasn't a lot of trouble, but we came into it, pushed through, and then look where the market failed right off of our next major eye level. It's, again, almost like this beautiful stair-step reactions on these levels. Hit 40.81, and then maybe not so cleanly held off of the major retracement level there, but a lot of chopping around right there. And then at the end of the day, what happened? We pulled back right to the 200 moving average, popped right into our next minor level up here. It wasn't a nice clean hold, admittedly there, but through the overnight session here, now the market has been holding right off the 07 half area. So these little peaks through levels happen all the time, but beautiful hold of 07 half all through the overnight session, and this is where we find ourselves here after this huge bullish push yesterday, getting the pullback from this minor area. So let's go ahead and jump up to the higher time frames, put this into context, and start looking at levels for this morning. I don't really have any clear bias as far as what's going on. Obviously, they raised the rates and all that, but let's see here. We do have some news I want to warn you about before we get into this analysis here. We have consumer sentiment about 30 minutes after the open, and then the Chicago PMI 15 minutes after the open. So we're going to want to be aware about, and actually let me go ahead before we jump to the higher time frame analysis. Let me put a little visual reminder on my chart here for 6:45. That's going to be the Chicago PMI. 6:45. And we'll get that on the 1 minute and the 3 minute so we can see as it gets closer. And then we have the 7 a.m. So let me copy that over and put this one at 7 a.m. Okay, perfect. So be aware of those two times. We could see a pretty big jump in the market, you know, a pretty big spread on the order book. So let's go up to the daily chart and take a look here. Yesterday, we had what we said was, remember, that potential bearish divergence from the high of the day before, because we saw this setting up like that. But because of yesterday, what happened was we pushed to the high of the day before, that 40.42. It pulled back, so it started following in what we would expect would be from the daily and the 4-hour bearish divergence. And then the bulls jumped in right off that 39.97 level, and we just started ripping higher. So that bearish signal that we saw from the high of the day before actually got negated. So this is one of those false signals where it just continued to carry through. So I had to get rid of that about midday there, and so we don't necessarily have that daily divergence as the RVI continues to develop. This morning, I'm not a huge fan of now calling this divergence, although you could argue from these highs back at the beginning of June, if I have the date, yeah, from the beginning of June, we did push. We haven't quite made it back up there, and RVI is still technically pushing up higher like that. So if you wanted to, you could make a little argument that there is divergence there from the last major swing high back here, but not necessarily the pattern I'd like to see. I really would have liked to have seen the RVI down like that, right? So we were getting a lower high on RVI compared to the high we made a couple days ago back here. But whatever, we got a little bit of a spacious argument there for the bears off the high of yesterday on the daily chart. Outside of that, over here, looking at everything, we are getting actually pretty close to the 50% retracement of the sell-off from the all-time high. So I told you I'm kind of skeptical of this really breaking out, but it seems to really be following through so far. So just be aware up top there, we've got 42.21, I believe is the number. 42.21 quarter is the 50% retracement of the major sell-off from the all-time high. So be aware of that on the higher time frames. And then obviously yesterday and the day before's candles looking very strong. We'll see if we get that continued follow through here this morning. I'm going to go down to my 4-hour and see what signals it's giving me, and then we'll take a look at the 60-minute chart for all of our levels. So the overnight high, again, we see this happen pretty often. Our overnight high got a very clean 4-hour bearish divergence from the highs there. So be aware, basically the high of yesterday, the overnight high, very close together there. If we can't push up through it, kind of like what happened yesterday, as we pushed up into that area and we got the failure, we're going to be looking to short that sucker lower. If they do pop up through and we get through it, again, just like yesterday, it eventually popped and appreciably just pushed right through the high of the day before, then we'll look to target the levels we have up above us, and we'll take a look at all the levels coming into the open here. So let's go over to the 60-minute chart where I've got it all mapped out. So there's two fib legs this morning that I think are going to be really relevant. Let me just, to be thorough here, zoom all the way out and just point out we do have a major fib from the major low back from the lows of June, basically the low of the year, all the way up to whatever high we make, whether it's the high from yesterday or if we continue to push, we'll have to, redraw it. But we do have that much larger fib leg. I'm not going to talk about that today. What I want to talk about is zooming in here to what happened a couple days ago and look at that retracement. If it starts to actually break all of this stuff, then yes, we're going to have to go back and start looking at the larger retracements. We've got this guy here, this sucker, all the way when we came down right into our little shaded region and literally bounced from the low of that shaded region. That's the fib leg we'll have to look at if they end up coming down and breaking through the lows we made just 2 or 3 days ago. But I don't want to messy up the chart too much. It's already got enough stuff on it. So let's look at this bounce all the way back from 2 or 3 days ago when we came down into our major eye level at 16.5. That leg from that low, I believe it was 39.13.5 or something, all the way up to the high we made yesterday. We do have kind of these three major fibs. We've got 35.50, 40.35.5, 40.12 quarter, and 39.88.75. So that would be the larger fib leg. And then the smaller fib leg is the low of yesterday up to the high of yesterday. So basically what we have here is we have kind of this first wave up. And I'm not a huge Elliott wave guy. I haven't studied it. But essentially we have this nice wave up, this impulse up. We have the pullback. So there's leg number one right there. There's the pullback, and now here's leg number 2. So we have the whole thing all the way up, which is those 3 fib legs I just mentioned. And then we have the smaller fib leg, this second, let me delete all this out, this second bounce up. So basically the low of yesterday to the high of yesterday. We've got the 50% on there. And then we have the 38 retrace here around 40.66 and the 61.8 retrace. Where am I? Oh yeah, so the 38, the 50, and then the 61 right there at 38.75. So those are the major fib legs you're going to see on the chart here on this if the market does continue to pull back. And outside of the fib legs, what else do we want to consider here this morning? I might actually want to go down to my 10-minute chart. Let me go down to my 10-minute so we can zoom in on everything happening from yesterday's low to yesterday's high. So let me go over there. And we can take a look at everything we want to be aware of here if the market does pull back and get through the major eye level at 40.81 here. So we have, again, the retracement levels you should be aware of, I just mentioned. And then we have just some swings. We have this swing here where we had a lot of trouble yesterday for what looks to be about 1 or 2 or maybe 3 hours. We could not get through that area at 58. So we've got a little pocket of structure right there that I wouldn't be surprised to see if we pull back, finding some support right off of that structure box right there. So we've got that swing high there at 58. And then we have this little section down here, which was the major resistance, 40.42 to 40.44. That's still going to be in play this morning. In fact, if you look back, we've got the major high from the day before yesterday up there right in that 42 pocket. And then we have the high from, if you remember, out of the open yesterday, which we pushed to, which was like 40.41. So that whole little area right there, another potential area we could see some support. And then it just so happens that the 2 fib legs that we were looking at have some decent confluence just below there as well. So there's a little pocket in there. I'm not going to highlight the whole thing, but each of these distinct levels should be considered potential supports. Any deeper from that, we've got 40.23, which again yesterday, if you zoom back and look again, lots of resistance around 40.23. And then we come down into this major swing all the way back from July 22nd highs there. And that swing, again, also very good potential to bounce. Remember, is right around 40.16. And then we have the fib leg very close by at 40.12 there. Any deeper than that, and it's all the same levels that we've been mentioning before. So you should already be aware of everything else. All these levels are lining up. All these levels are lining up perfectly with all the other structures in the market as this pulls back. So basically this morning, what are we looking at here? If price cannot get up through the high of yesterday, we would be expecting a pullback. The question is going to be what areas in the market are going to hold. And again, unless you have some other signals, unless you have some clues from market internals and things like that, sometimes it's hard to really determine which level is going to hold. So just be aware that we've got all these potential supports down below us. And then again, if the market does start to rip, and we end up getting through the high of yesterday, getting through the minor eye level, and you never know if they're going to come up and have trouble right from the OPL. If we get through all that, we've got all the targets up above, which again are the same major and minor eye levels that are on our list. So you should have all those levels on your chart. There's really not much else other than the major retracement that I mentioned earlier, all the way up 42.21 and beyond. So I don't know, are we going to push another 150 points here? It's anyone's guess. So if the market internals open really strong again, we could potentially see another impulsive move up. But I'm not going to prognosticate on what's supposed to happen here. We've got our guidelines. We've got the lines in the sand this morning, and we'll just play back and forth between all the levels. So I think that wraps it up for Friday. Again, be aware 15 minutes and 30 minutes after the open, we might have some pretty big jumps in volatility. All right, guys, so we'll see you back here next week. And for all the members, we'll see what we can kind of get here coming into the open. So take care.